Welcome to our explainer on The Intelligent Investor. This isn't just any book on investing, it's the one Warren Buffett famously called by far the best book on investing ever written. So let's dive in and find out why. First things first, we've got to tackle a huge question, because every single year there's this invisible force just eating away at the value of your money. You know what I'm talking about. It's inflation.
And this, right here, is the huge problem Graham tackles head-on. See, while people who just stash their cash in a savings account are watching its buying power slowly shrink, investors have this incredibly powerful tool to not just protect their wealth, but to actually grow it. A lot.
So what does Graham even mean by an intelligent investor? Now, here's the twist. His definition has absolutely nothing to do with your IQ score or how many books you've read. See, for Graham, it's all about your character. It's about your mindset. An intelligent investor is someone who has emotional discipline, who can be patient when everyone else is freaking out, and who stays disciplined when everyone else gets greedy.
And this quote just perfectly sums up the core lesson of the entire book. The biggest fight you'll have isn't with the market, it's with yourself. It's about learning to control those two powerful emotions, fear and greed. So, to win this battle against yourself, Graham says you need to focus on these three simple but incredibly powerful goals. It's about protecting your capital, aiming for steady, reliable growth, and maybe most importantly, learning how to not get in your own way. Now, this is where you have to totally flip your thinking on its head. Most people feel really safe when the market is soaring, and they get terrified when it's crashing. The intelligent investor, they think the exact opposite. A falling market is a buying opportunity. A market hitting all-time highs, that's when you get cautious. This right here, this is your ultimate shield. The margin of safety is the bedrock of Graham's whole philosophy. It just means you insist on buying something for way less than what you think it's actually worth. That way you build in this huge buffer just in case you're wrong or you just get unlucky.
Okay, so how do we actually put all this into practice? Well, Graham knew that not everyone's cut from the same cloth. We don't all have the same amount of time or the same personality. That's why he lays out two very different paths, and you've got to be honest with yourself about which one is really for you.
So on one side, you've got the defensive or passive investor. Their whole game is about safety, keeping it simple, and basically setting it and forgetting it. Then on the other side, there's the enterprising or active investor. This is the person who's ready to roll up their sleeves and put in the work to find those amazing opportunities and try to beat the market.
All right, let's dig into the path that Graham recommends for pretty much everyone. It's simple, it's powerful, and it's designed to be as hands-off as possible. We're talking about the defensive strategy.
Graham's starting point is just beautifully simple, a 50-50 split. Half your money in stocks, half in bonds. Now, he says you can tweak that. If you're feeling cautious, maybe go down to 25% stocks. Or if you're feeling bold, go up to 75%. But that 50-50 split, that's your home base.
And the real magic here is that it's all about building a system. It's an automated, disciplined process that takes you and your emotions right out of the equation. You invest regularly, you rebalance, and that's it. You end up automatically buying more when things are cheap and selling a little when they get expensive.
And look, for most of us, trying to be a stock-picking genius just isn't necessary. Graham was a massive fan of what we now call low-cost index funds. They give you instant diversification across the whole market for next to nothing in fees. It's the perfect tool for a defensive investor. But hey, what if you get that little itch to gamble a bit, to speculate? Graham totally gets it. He gives you a sandbox to play in. He says, take no more than 10% of your investment money, put it in a totally separate fund money account, and go for it. Just keep it away from your serious 90% portfolio. All right, now for those of you who want a real challenge, who are willing to do the homework and put in the hours, there's the second path. This is the much tougher, but maybe more rewarding role of the enterprising investor. Now, being enterprising absolutely does not mean being reckless. In fact, it takes even more discipline. It means you have to actively avoid all those temptations that sink most people, like day trading, chasing risky junk bonds, or buying the hottest stocks when they're already super expensive.
So here's the secret sauce for the enterprising investor. You're basically a bargain hunter for great businesses. You're on the lookout for fantastic companies that are going through some short-term, fixable problems. When the rest of the market is panicking, that's your cue to swoop in and buy quality on sale.
But listen, Graham gives a huge warning here, and you really need to hear this.
Do not, I repeat, do not risk a single penny of real money until you've proven you can do this. He says you need to paper trade. Track your picks on paper for at least a full year. Make your mistakes when they don't cost you anything.
In all of this, both paths brings us right back around to the single most important, most profound lesson in the entire book. Whether you're defensive or enterprising, your success is going to boil down to one thing.
That's it. The market's going to do what it does. Stocks will go up, they'll go down. The real wild card, the one thing that actually determines whether you win or lose in the long run, is your own behavior. The risk isn't out there in the market, it's right here.
Yeah, Graham really doesn't pull any punches here. This line is a gut punch. In a good way. It's just this stark reminder that you, your own emotions, your own impatience, your own biases, you are the single biggest threat to your own financial success. And that really is the final piece of the puzzle, isn't it? You can't ever get rid of risk completely. That's impossible. But by understanding yourself and by building a disciplined system that saves you from your worst impulses, you can learn to manage that risk intelligently. And that gives you the best shot at winning. So, Graham has laid it all out for you. He's given you the timeless principles, the strategies, the map. The only question left, the really big one, is the one you have to ask yourself. Based on your personality, your time, and your temperament, which path is the right one for you?